Elon Musk just became the world's first trillionaire, at the exact same moment one of his own companies was losing billions of dollars. That shouldn't be possible. You don't get richer than 21 countries combined while your business is bleeding cash. And yet, in June 2026, that's exactly what happened. So which is the real story? Is this the greatest wealth-building move in human history, or did the entire system just get played? Stick with me because by the end of this video, you'll understand exactly how a man can be worth more than $1 trillion while his business loses money, and why that number might be the biggest illusion in modern finance. Let's make this number mean something first, because your brain genuinely can't process it as is. If you paid someone a very generous $70,000 a year, and they worked without stopping, no weekends, no retirement, no death, it would take that person over 14 million years to earn $1 trillion. 14 million years ago, there were no humans. There wasn't even a U for evolution to build yet. That's the number we're talking about. And in June 2026, Elon Musk crossed it, becoming the first person in recorded history to be labeled a trillionaire. Here's how it actually happened. Musk's company SpaceX went public on the Nasdaq, and in its very first day of trading, investors valued the company at more than $2 trillion. Combine that with his stake in Tesla, and Musk's paper net worth landed somewhere around $1.1 to $1.3 trillion, depending on which hour of trading you check. Sounds simple. A stock went up, a rich man got richer. But here's the crazy part, almost none of that money actually exists yet. Imagine waking up tomorrow with $1 trillion on paper. Congratulations. Go buy a coffee, that works fine. Now try to sell even half your fortune before lunch. You can't. Not without wiping out hundreds of billions of that wealth in the process. That's Musk's actual situation. He said publicly more than once that almost none of his personal net worth is actual cash. Nearly all of it is locked inside stock. And he can't simply cash it out. If Musk dumped a huge chunk of his SpaceX or Tesla shares tomorrow, other investors would panic, wait, why is the founder selling? And the stock would crash, taking a massive slice of that $1 trillion down with it. So here's the uncomfortable truth. This wealth only exists as long as everyone keeps agreeing to believe in it. Take Tesla. Its stock has traded at valuations far beyond what its car sales and profits alone would justify. For years, investors have paid not for what Tesla builds, but for what Musk promises it will become. There's actually a name for this in classic investing theory. Economist Burton Malkiel described two competing ways a stock gets its price. One is the firm foundation approach, value based on real earnings, real profit, real fundamentals. The other is what he called castles in the air, value based purely on story, vision, and belief, disconnected from the underlying numbers. Tesla and now SpaceX are living inside that second theory. To be fair to Musk here, SpaceX isn't a company with nothing behind it. Its rockets are real, reusable, and currently the backbone of how the world launches satellites, and its Starlink internet division is genuinely profitable and growing fast. This isn't a company built on pure vapor. But according to the investment research firm Morningstar, SpaceX's fundamentals, its actual earnings and cash flow, would justify a valuation closer to a fraction of its trading price, not the $2 trillion plus number the market slapped on it in week one. The gap between those two numbers is essentially pure belief in Elon Musk himself. And that belief has a track record worth checking. Now it gets stranger. First came the Hyperloop back in 2013, a concept promising to shoot people between cities at airline speeds through a tube. It generated a decade of headlines and investor excitement. Then, in 2023, the company built around it quietly shut down. It had never carried a single paying passenger. Then came full self-driving. In 2015, Musk said Tesla would have it within about 3 years. It's now been over a decade, still waiting. Then came the robot Axis. In 2019, he predicted 1 million of them on American roads within a year. That fleet still doesn't exist at anywhere near that scale. Then came Mars. Back in 2014, he talked about landing humans there within roughly a decade. That deadline has already quietly passed too. See the pattern? It's not one broken promise. It's a rhythm. Announce something world-changing, let the stock price absorb the excitement, then quietly push the deadline. Almost nobody notices because by the time one promise expires, a new one has already replaced it. None of this means Musk hasn't built real things. SpaceX genuinely reinvented rocket reusability, and that's an actual engineering achievement, not hype. But the promise consistently arrives years before the product, sometimes it never arrives at all, and the market keeps paying for the promise anyway. Here's where it stops being just a Musk story and becomes a story about how the ultra-wealthy live differently than everyone watching this video. It's called Buy, Borrow, Die, and it's not a conspiracy theory, it's a well-documented, completely legal strategy. Step 1. Buy. Rich founders hold their wealth in company stock instead of cash, because stock only gets taxed when you sell it. Step 2. Borrow. When they need actual spending money, say to buy a company, instead of selling stock and triggering a tax bill, they take out a loan from a bank, using their shares as collateral. Musk did roughly this when he bought Twitter, borrowing heavily against his Tesla shares rather than selling them outright. No sale, no capital gains tax, and he keeps the shares. Step 3. Die. Hold the stock for life, keep rolling the loans over, and when you pass away, your heirs inherit the shares. Under U.S. tax law, that inherited stock gets its value reset, meaning decades of growth can pass to the next generation essentially tax-free. This isn't theoretical. A well-known analysis by the investigative outlet ProPublica found that the 25 richest Americans paid a true tax rate, taxes paid divided by wealth growth, of around 3.4% between 2014 and 2018. Compare that to a typical salaried worker, who can easily pay 20% or more of their income in tax every single year with no way to defer it. Same country, wildly different rules, depending on whether your money comes from a paycheck or from stock you never sell. Now comes the question nobody agrees on. Fact: Musk was Donald Trump's single largest donor in the 2024 campaign, contributing roughly $290 million. Fact: after Trump took office, Musk took on an unusually visible advisory role in the administration, including work associated with the newly formed Doge initiative. Fact: in the 2 years following that election, Musk's net worth grew roughly fivefold. Critics argue that proximity to power directly translated into regulatory tailwinds, faster approvals, friendlier rule changes, and dropped investigations into his companies. Musk and his defenders argue the opposite, that SpaceX's valuation reflects genuine technical dominance in the launch industry, that Starlink's growth is organic, and that correlation between closer to Trump and richer doesn't prove causation. What we can verify is this. When Musk and Trump publicly feuded in 2025, Tesla's stock dropped roughly 14% almost immediately. That's a fact, and it tells you something real. However Musk's fortune was actually built, a meaningful chunk of its current valuation is tied to political stability that isn't fully in his control. Let's zoom out one last time. Picture this. Imagine every public hospital in your country, every university, every public school, every fire station, every library, every piece of infrastructure your tax dollars fund in an entire year. Now imagine one person's paper fortune being large enough to have paid for all of it, with room to spare, without that person ever touching a paycheck or writing a check most of us would recognize as spending. That doesn't mean Musk owes anyone that money. It's his legally, however you feel about how the number was created. But it's worth sitting with the comparison for a second. The gap between what one stock market number represents and what it takes to run entire countries is smaller than most people assume. So, was Elon Musk's $1 trillion real? Technically, yes, it's a real number, calculated the way Wall Street calculates every fortune. But real and stable aren't the same thing. It's a number built on belief, leverage, and political weather, and all three of those can change fast. Here's the line worth remembering. The stock market doesn't pay you for being right. It pays you when enough people believe the same story. The biggest lesson here isn't really about Elon Musk. It's about how easily humans mistake price for value, and investors who confuse the two usually end up paying for that mistake sooner or later. So here's the one practical takeaway. Before you put your own money into a company because of a founder's story, check whether that valuation is standing on firm foundations or on castles in the air. Revenue, profit, actual demand, not just vision. But here's the uncomfortable question this raises next. If the richest man alive can legally pay a lower tax rate than a schoolteacher, using a completely legal 3-step trick, what does that mean for the taxes you're paying right now and where that money's actually going? That's what we're breaking down in the next video.